Hey everyone, DoorDash reported fiscal 2023 first quarter earnings results, and I've gone through those earnings, and there's a lot of numbers I want to share with you that I think you should know if you're interested in DoorDash stock. So I'm going to do that in this video. I'm also going to answer if DoorDash stock is a buy after earnings, so you're going to want to stay tuned for that. Let's begin. So revenue increased by 40% for DoorDash to 2 billion. Remember when we thought economies after they reopen and restaurants reopen, DoorDash revenue growth would stall and would be done with? That hasn't been the case. People like the convenience of ordering food for delivery, and DoorDash's business has remained robust even after economies have reopened. The problem has been to run this business with a profit, right? The net loss, it did improve, but the company still lost 162 million. That was an improvement from the loss of 167 million in the same quarter last year. Total orders increased by 27%. The gross order value increased by 29% to 15.9 billion. The gross order value is important because this is where DoorDash takes a piece for itself. If you spend, let's say, $40 ordering something on DoorDash, DoorDash will take a piece of that for itself. And that piece they call the net revenue margin increased to 12.8%, up from 11.8% in the first quarter of 2022. The good news for DoorDash and the industry is that these take rates, as I call them, have been increasing, right? Uber Eats, I did a review of Uber's earnings results. You can see that on my channel. And Uber did the same thing. They increased that percentage they keep for themselves, both in their ride segment and in the Uber Eats food delivery segment. So what that means is competition is finally easing, right? These food delivery companies were competing fiercely. I mean, the worst competition out of any industry I've seen is happening in the food delivery industry still. Even after I mentioned that it's getting better, it's still really bad. You could see for yourself, open up your email, how many coupons do you have from DoorDash, Uber Eats, Grubhub, and others to order food for delivery, right? 20% off, 40% off, 50% off, $20 off your order of $20, so almost a free order. This is common with these companies, and it's been eating at their profit margins because people are not ordering unless they get those coupons. I'm one of those customers, right? DoorDash technically counts me as a customer, but I only ever order when they send me a massive coupon, which makes it, I think, so attractive for me that I think they lose a lot of money every time I make that order, every time I use a coupon. So I suspect there's a lot of customers just like me who will only order when DoorDash sends you a very attractive coupon offer. And so that to me is the biggest risk with DoorDash, which I will come back to at the end when I answer the question if the stock is a buy at the end of the video. Cash flow from operations improved to 397 million. This was an increase from a loss from operations of just 20 million. But before you think that's good news, let me tell you how much stock-based compensation they paid. Now, keep in mind, stock-based compensation is a non-cash expense. So when a company like DoorDash pays stock-based compensation, it makes its cash flow from operations look good, but it also has the negative side effect of increasing share count. So let's look at that. DoorDash paid 230 million of stock-based compensation in the quarter this year. That was up from 129 million in the same quarter last year. So they boosted their stock-based compensation by nearly double. So that caused the WASO, which stands for weighted average shares outstanding, that increased to 390,397, up from 349,219. So a nearly 20% increase in the share count year over year. And if you look back further, DoorDash has significantly increased its share count. Why is that important for you as an investor if a company increases the share count? That it's important to you because if you own 1 share or 10 shares of DoorDash, that means if when they increase their share count, that means your ownership of the company, your percentage ownership of the company just shrunk. It just shrunk, right? Because if you owned 100 shares and there was only 1,000 shares outstanding, you had 10% of the company. But now if you own 100 shares and from 1,000 it goes to 10,000, your ownership just went from 10% to 1%. So you got diluted, your ownership got diluted. That's what's been happening with DoorDash. They've been diluting shareholders significantly over the last couple of years. Management is forecasting Q2 gross order value of 16.1 billion at the midpoint. So quarter over quarter increase and robust revenue continues. That hasn't been an issue for DoorDash. I mentioned they've put that worry to rest. They've sustained even after reopening. The big question is the business sustainable? Can DoorDash operate sustainably if they were to charge customers prices high enough to generate profits? Can they do that? And I don't know yet. I don't know yet. And that hasn't been answered to me. And this quarter, again, didn't answer that question. They just continue doing more of the same, right? Selling people their services at a price that generates losses to the company. And so they keep doing that. And yeah, people keep buying their services using DoorDash because it's convenient and they only charge you, $6 or $8 if you're ordering for yourself. And it's convenient. Yeah, I'll pay $6 instead of having to drive out, pick up something in down the street or something. And on top of that, they're giving me a discount on my order. Okay, I'll use DoorDash. But what if they eliminated all those coupons? What if they started charging you a price high enough to generate a profit? Would you still use DoorDash? That remains to be seen. And that's the main reason why I'm going to say DoorDash stock is not a buy. It's just wait and see until they can prove that more clearly, or at least a clear path to that. I would not buy DoorDash stock. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.